Three stocks on my heavy buy list for October of 2025. And as you guys know, this channel is mainly focused on AI and semiconductor companies. The three companies today are going to be mainly focused in the AI aspect and have very limited exposure to the semiconductor industry.
I
So
want to
let's
thank
take
the
a
Motley
closer
Fool
look
for
in
sponsoring
today's
this
episode.
video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, the first stock I want to take a closer look at is Amazon. And year to date, the stock is pretty much flat. I am a growth investor, and I do believe the Mag 7 do have the opportunity to outperform the market during this massive AI cycle. Now, we were talking about Google in this channel when the stock was 150s, 160s, screaming a buy. Now, I still believe Google is a massive opportunity in the long term of things, but it's already a very healthy position in my overall portfolio. I think right now the opportunity sits here with Amazon, right? I'm happy we purchased Google when we did. Now I believe it's Amazon's turn. I don't own all the Mac 7s. And I believe they all have their own time to kind of add up. For me, now's the time sitting for Amazon. Now, I want to look at a quick valuation metric, and this is going to be forward PE ratio. Now, the forward PE ratio looks a little bit wonky, actually a lot wonky, because during during the year of 2022, we did see negative PE ratios. That's the main reason I tend to look at median when looking at kind of historical values opposed to the average. The median eliminates a lot of these random cycles. So the median right now in the past few years, since 2021, we can see is sitting at roughly 41.96, say at 42. The average, again, I don't like using the average, is negative 20. If you look at the median and the current number is 31.7. I believe on the valuation metric, historically, Amazon is sitting at very attractive levels. And the revenue segments that I care about continue to grow. I mean, if we look at AWS on the last 12 months, continues to see that nice step function. And I believe thanks to the AI era, this is going to continue. We also see that their subscription revenue, which tends to have a high margin, is also seeing a nice step function. Same with their advertisement revenues, right? Three markets that I believe can continue to grow for Amazon. Three markets that have high margins for me are still growing, and the company is undervalued at the moment compared to historical levels. This is one that for me is definitely screaming a nice buying opportunity for long-term investors. The other thing is I believe the AI market is a revolutionary product and a revolutionary technology. They do have a nice ownership in Anthropic. Anthropic is actually doing really good. While it's not appealing to the masses, it definitely has created its niche in the cloud market, and their investments in there, working with their overall ASIC solutions. I believe the opportunity for Amazon in the AI space is definitely pretty high. Now, the final thing I want to show is one of the things scaring Amazon investors right now is kind of the decline in AWS, but semi-analysis. And I've covered this image very much a long time ago when semi-analysis reported this, but semi-analysis expects AWS to see a massive growth. And this is thanks to Anthropic. And again, I continue to see Anthropic's use case continue to increase, them expanding their ASIC solutions and then expanding their overall data center market. So for me, Amazon is one of those buying opportunities. Now, if you do enjoy charts like this, and it makes long-term investing so much easier by getting all this data, make sure to check out my special offer, fiscal.ai/Jose, for 15% off. If you are a long-term investor, I definitely would recommend it. Now, the second stock I want to take a closer look at is GitLab. Now, this is one that I do own in my overall portfolio. Right now, we can see year to date, the stock is down roughly 16%. From its overall peak of the year, the stock is down nearly 35%. We can see right now, the overall stock is sitting at roughly $46.91. Now, for me, this one is not profitable in earnings, but I like to look at kind of those price to sales ratios for the software space. I like it to be under 10. That's a metric that for no real reason I like. It's something that I feel comfortable investing in a software business. Now, median has been right now 10.29. If I look at forward EV to EV sales, it's sitting at 6.5. This is, to me, sitting at attractive valuations for the overall market. The other thing we are seeing is total revenue. So total revenue for this has continued to grow in the last 12 months. We see GitLab right now sitting at roughly $857 million in the last 12 months. I believe within the next 3 to 4 quarters, we will see this kind of going at a $1 billion annual run rate on their revenue. Now, for me, GitLab has various opportunities, and their biggest lowest hanging fruit is just the expansion inside existing logos. They already have a nice net retention rate on their product of over 120%. But I believe with their innovations in the AI space, with their ability to monetize AI solutions, with the recent federal ramp authorization that they got, and with the conversion rates from free to paid, this is the opportunity to grow in revenue and to grow in margins. I believe the software market has various opportunities, and GitLab is not just a IDE, right? Many people think that the AI market is eating the coding space, but this is a company that does more than that. I mean, if we kind of look here, let me kind of just break it down here. So they are a whole end-to-end DevSecOps. So GitLab, this is to me the one that's going to be sitting at a high growth, high risk, right? Amazon for me is more stable business with still growth opportunities. Now, the other one where it's not as high risk as Synopsys, but it's not as stable as Amazon. It's, in my opinion, a growth opportunity higher than Amazon, but not as high as GitLab, is Synopsys, ticker SNPS. Now, for those that are not familiar with Synopsys, this is a software company that helps with kind of like the design process of semiconductors. So this is the only one that's somewhat comparable in the semiconductor space. The great thing is this doesn't necessarily follow the semiconductor cycle, and it doesn't care if it's an AI winner or not. It doesn't care if NVIDIA wins. It doesn't care who wins. People use Synopsys to develop their own semiconductor, their own chips, their own electric boards, and the list goes on and on. In the past month, the stock is down roughly 21%. Year to date, the stock is down roughly 2.8%. And from its overall year to date peak, the stock is down nearly 27%. Now, I talked about this during this earnings drop that we saw the stock go under 387. And I mentioned that I believe this was an extreme overreaction. So for those that are curious, what happened to Synopsys is the China market continues to be extremely weak, and they believe it will continue to be weak throughout the upcoming years. The second thing is their IP revenue, which is a portion of their revenue, of their total revenue, has kind of not seen much growth since we can see July of 2024. We're now in July of the recent quarter was July of 2025. So for over a year, they've barely seen any form of growth in this market. And they believe this is going to continue to be weak. They also believe that with the lack of growth in Intel Foundry, some of their IP, which again focuses here, is not going to be, it didn't meet the guidance because of maybe some of the slowdowns at Intel Foundry. Now, to me, on the bright side, the design automation, this is their main software, continues to grow on a sequential basis. Look at that last 12 months. This is their core business. This is growing, and this is not stopping anytime soon. Their overall valuations, forward PE ratio is sitting at 36.42, where their overall median is 37.9. So historically, all three companies that I've looked at today are sitting below their 5-year median. And again, the median eliminates a lot of the random noise, which I enjoy. And it's not like Synopsys is becoming a much weaker business, right? We can see overall gross profit margins are still much higher than October of 2020 and are still in the 79%. Now, all these are opportunities that I believe are possible. GitLab is the only one that is in my overall portfolio. In the upcoming days, if we continue to see opportunities for these stocks, these are ones I'm planning on adding in my overall portfolio. So let me know, what are some of the stocks that you're thinking about purchasing right now in October? Also, I'm sorry this video might be coming out a little bit late. I am in vacation with the family right now. We are out in Arizona. I do have a semiconductor event as well. So my videos this week might be a little bit later than usual. But I hope you guys enjoy all the content. Take care, have a good day, and see you all next time.